Yes, hello. I'm Mike Feakin. I am the Strategic Partnerships Advisor for First Five Nebraska. If you're not familiar with First Five Nebraska, we are the early childhood education policy organization in Nebraska. We work on all things early care and education wise. We also get into maternal health and wellness, and we also get into child safety. But really, our bread and butter is early childhood education and care, and all the exciting policy issues around that. So as you kind of know, or hopefully know, the Nebraska legislature just got done about the third week or so of April. And so now we are in a little bit of a space where we can take a breath, but as the rest of the summer and then fall goes along, we will also have interim hearings and additional like interim resolutions that they are interim studies that senators are working on. And so we are still busy with trying to unpack a lot of the things that have already been proposed for interim studies. And so as we are thinking about interim studies, just make sure, please try and follow our bill tracker that is on our first5nebraska.org site, because there are many that are affecting our child care workforce, our child care programs, and that type of thing. So moving on, one of the things that was passed last year were a series of tax credits for childcare. And so I say that it was last year. The exciting thing is that some of them are finally really starting to make their way into actually being implemented. And so that's the one thing that we have really found in the last, I don't know, 10 months or so, is that although programs may be passed, it does take a while for them to actually be implemented through various departments, and make sure that the forms are created and that type of thing. So let's just begin here. Let me preface all of this by saying, and Shauna, you know that I say this all the time, just remember, everybody, I'm neither a tax professional nor an attorney. So I am giving you the interpretation that we see, but your individual case may vary as you're talking to attorneys or to tax professionals. And so you will want to make sure that you consult with them as well. So, but first things first, the one that I am most excited about is this child care tax credit for contributors. Excuse me. Sorry, I feel just about the last week or so, I've just felt really junky. And so I'm trying to fight my way through it. I know that I know Aaron and Libby, they really want me to always be on my best, my best behavior, but sometimes it just doesn't work that way, and everyone has down days, right? Okay, so the child care tax credit for employers and contributors. What's wrong? Libby, you got something to say?
I'm not eating popcorn and I still get called out.
That's right. That's right. So this is a tax credit, and when I talk about tax credits, there's a couple of things that you really have to keep in mind when we are talking about tax credits. There's two types. There is a what's called a non-refundable tax credit, and then there's also what is called a refundable tax credit. And there is a difference between the two, and it really just depends on whether or not a person has a tax liability during their tax year. So for instance, and I use really just general examples, but from an individual standpoint, each year when you file your tax return, you'll either get a tax refund, or you actually have to pay in to, you have a tax liability and that you'd have to pay in. And so that is the major difference when it comes to whether you have a refundable or a non-refundable tax credit. A non-refundable tax credit is one that you really need to have a tax liability in order to be able to take advantage of it. And so for folks that owe something, if they have a liability, then the non-refundable can lessen that amount. And in some cases, it can take it all the way down to zero. The refundable tax credit, and we'll get to a program here that utilizes a refundable tax credit, but a refundable one is actually can be cash in hand. And so if you actually say are do a refund, a refundable tax credit, you can actually get dollars on top of that as well. Okay, so non-refundable must have a liability, can take you down to zero. Refundable, cash in hand, you can actually get cash back. All right, so now that we've explained that difference, and I think there's some slides in a little bit that kind of go into that more, but the Nebraska Child Care Tax Credit for employers and other contributors is the non-refundable portion of the Child Care Tax Credit program package. All right, and so for child care programs, or for those that is either existing or in the process of doing capital campaigns, or ones that if there's an intermediary that runs a scholarship program, or those types of things, if they receive dollars, okay, from a contributor, then that contributor can apply for these non-refundable tax credits. I lost my train of thought there. The amount of the credit can vary. It can be either at 100% or at 75%. And we'll go into a little bit about the difference between how much of that tax credit percentage is. The neat thing about this one, the one that I'm really excited about, why I'm really excited about this tax credit, is because it can go for nonprofit childcare programs or for-profit childcare programs. All right, that's pretty unheard of in a tax credit incentive program. So we're pretty excited about that. So that means that in-homes actually can be eligible to receive contributions. All right. Go ahead. Is there a question? No. Okay. All right. Okay. So let's look at who can apply. Again, these when we're looking at who is applying, it's really who is the one that is making the contributions. So it can be employers, it can be businesses, it can be individual contributors, and it can be philanthropies, all that type of thing. Philanthropies get a little bit murky just because they typically don't have a they typically won't have a tax liability. There's some other nuances with that, but in general, think about anytime someone is making a contribution, that person can apply for these. And then the other thing is what is actually eligible for qualification. Okay, so again, it is scholarship tuition programs, to start up a program to help do some of those ongoing operational supports. Really anything that'll help keep a program either get started or keep going. One thing to keep in mind is that in order for it to be eligible, it needs to be what's considered an arm's length transaction. Okay, what does that mean? Well, it can't be a parent just making a tuition payment to a provider. All right, that doesn't count as a contribution because it's not considered arm's length. It's not like it's really.
Uh-oh, Mike, you're frozen.
Okay. Now, when we're talking about some of these 100% or 75%, oh boy, my internet connection is unstable. So just know you may lose me. And everyone's like, thank. Talking about either the 100% or the 75% tax credit. One of the things that would make it a 100% non-refundable tax credit is if you are in if the program itself is in what is called an opportunity zone. Now, an opportunity zone, for those that if you don't want to know what they are, just kind of tune out for the next 30 seconds because they're really kind of complicated. Say 5-6 years ago, the state of Nebraska was asked by the federal government to designate opportunity zones, and the definitions of those would be portions where employment wasn't, employment wasn't quite as high as what it needed to be, or maybe there was some families of low to moderate income, and so these zones were designated. And I think Nebraska has 43 or 47 of these opportunity zones. In Buffalo County, you actually do have 2 of them. They are in Kearney. And so those tracks that are on the screen there, if you have a program in there, you could and you receive a contribution, you could offer that contributor 100% non-refundable tax credit. Those, as far as we know, those opportunity zones don't change. Like I said, they've been the same for 5 or 6 years. If you go to the Department of Economic Development's website, there's a listing of all of the opportunity zones in Nebraska. And I'm just highlighting the ones here for Buffalo County. The other piece that I would say with that 100% tax credit is if you have a contract with subsidy, an active subsidy contract, then that program can receive can offer the 100% non-refundable tax credit as well. All other programs would be at that 75%. The forms themselves, this is what we were really waiting for from Department of Revenue. And the form, but here are the forms. They are actually on the Department of Revenue site right now. It's relatively easy. I mean, this is it. This is the application. I show 2 pages here, but the one on the left side, that's the form. I just blew it up and put it over on the right hand side too. And so I've seen a lot of incentive and tax credit type of applications before. This one is it's pretty simple. If the person fills out who they are, what the contribution is, and really where the contribution is going. That's it. If it's in an opportunity zone, then they would put in the tract number of that opportunity zone, and then submit this along with a receipt that I'll show in a little bit to the Department of Revenue. And then the Department of Revenue has a series of times and days to review that and let it be known whether or not the credit is going to be given or not. From a program or provider standpoint, this is the form. It does have to be on this type of receipt. And so again, this is on the Nebraska Department of Revenue site as well. But this is the receipt form. And again, relatively simple. You have to enter in who you are, if you are in an opportunity zone, and then what the purpose was, or what qualifying activity is it going for. Relatively simple. Again, left hand side, that's the full form. Right hand side, it's just blown up. So hopefully you can take a look at it easier. Okay, so before we move on, just a couple of things that I'll say about this program. This, although it was passed last year, it was really passed as a concept. as a pilot. So there isn't a lot of money behind this. There was $2.5 million assigned for this credit program. And so that pool of money is for this is entire, for the entire state. And it is for any contributions that are made between January 1st, 2024 and December 31st, 2024. And we still don't have clear guidance from Department of Revenue on how they will let either contributors know or people that are interested, like First Five Nebraska, in just how many of these tax credits are remaining. So while we definitely say yes, go out and talk to folks that, as you're fundraising for tuition scholarship programs or for startups or operating funds of established programs, and you're saying, hey, look, you may be eligible for this tax credit program. Unfortunately, we can't, there isn't any guarantee that they would receive this tax credit, because at the end of the day, or these tax credits, that 2.5 million may be fully what's called subscribed, that it may be already out the door. And again, we don't have clear guidance yet on how they will track that or how they will let people know just what has been subscribed. Okay. But it's still very exciting. I mean, from our standpoint, from a policy standpoint, we do want that 2.5 million to go quickly. We do want it to be fully used, so that we can show that there is that need and that people do want to contribute funds to eligible programs and providers. So like I said, it is a pilot program. It's essentially a pilot program, and we hope that it is successful. Okay. The next one up is the tax credit for actual childcare, for childcare that working families are paying for. This one is not available yet. We're just kind of showing some guidance out here, or some information, so that families can be ready when it does become available. And it'll become available closer to the end of the year. But this is actually for families that are paying for childcare. And so as you are working with parents, just, I guess, let them know that there will be this opportunity for either the $1,000 credit or for a $2,000 credit. And again, that some of that is based off of household income levels and that type of thing. But this one is very exciting as well. This one is actually remember the difference between non-refundable and refundable. This is the refundable credit. And so even if a family doesn't have a liability, they can receive this refundable credit. All right. This is the one that's kind of considered cash in hand. And they can use that, just as you would any other type of refund. Okay. Any questions on that so far? Perfect. All right. Now, this is the other one. And this one I say that it's been around a while just because it was a program. It's nuanced, right? It kind of went away and we had to renew it. So it's an existing program, but technically it's like a new program. But this is the School Readiness Tax Credit Program. And again, this one is for programs and our early educators, our professionals. And so this one has both in it. This one has a refundable and a non-refundable. Then there are different varying amounts depending on your level of either step up to quality on the program side. And then for our educator side, then it also depends on your classification level in NECPERS. Lori, you probably have a lot more that you can share about that, or maybe not. I don't know, but I try to stay out of the weeds in this one just because we have so many more partners in this one, and so this is pretty much all I talk about with this one. Um, unless there's questions, I can dive in a little bit more. um, so for individual, the refundable school readiness tax credit, again, there are things that you need to be aware of. And one of the major things is to be registered in NECPERS and have your education listed in there. Because that does help determine the portion of the scale that you will be on, and make sure that you have those that approved training in there. Okay, and then for the not for the wait a second, I think they're no man. Okay, again, working with other partners here, so we got Department of Education in there. And that's part of the NECPERS NECPERS program. Any questions so far? All right. Non-refundable. This is for our child care programs. One of the major things that we have ran into in the past is maybe I don't want to say it's a breakdown of communication, but there has been on some levels where if it's a large center, so many times the directors will get this information for individual programs, but the information on the educators, on the providers portion of it, doesn't always trickle down. And so we have seen instances where there's some non-use of the refundable side from educators, just because they actually didn't know that this was a existing program. So one of the things that I would urge is to make sure that there is clear lines of communication and promotion of both of these on the non-refundable and the refundable portions of the school readiness tax credit. Okay, for a program, major important piece must be with Step Up to Quality. Okay. Okay, we're getting to the end here. What I have just kind of mumbled through here is really just a small snippet of what is going to be happening with a statewide campaign. And I know for folks that I've talked to before, I'm sure you're like, geez, you guys have said there's going to be a campaign coming for months. We are working on it. We're getting much closer. So just know there's going to be, you're going to be hearing about these tax credit, each of the individual programs quite a bit. So you're going to be hearing about the family tax credit. You're going to be hearing about the school readiness tax credit. You're going to be hearing about the contribution tax credit through all sorts of different means. And so when you hear about those, just be like, oh yeah, that's what Dummy Mike was trying to talk about. So yeah, that should be, we're thinking it's going to be about the end of June or so. So it's taken a while to get everything formed, contract signed, work with our department friends, and making sure that we all have a clear message moving forward. I want to talk real quick because a lot of people don't ever maybe know about some of these other tax credits. And there's a lot of information right here, but I want to just briefly mention some folks have heard this before, but there is actually a federal tax credit program for employers that spend their own money for either establishing programs or for helping pay for employees' childcare expenses. So on the federal level, they can receive a 25% credit up to $150,000. When I talk to businesses, they're always very excited about this, but they've never heard about it. The IRS has had this around for, I don't know, 30, 40 years, and even they will tell you no one uses it. And so as folks go out, and if you are talking to employers, maybe just drop them a line and say, hey, did you know that there's this 45F program through the IRS, and that there is this form 8882? Again, simple form. You just fill out who you are, what you spent your money on, and you can receive that 25% federal tax credit, again, up to $150,000. Let's see. And then just in general, again, with employers, they can always deduct these costs. They can deduct their costs if it is for their employees. It's just a general kind of cost of doing business type of thing for businesses. Just like if they are paying for other business expenses, they can deduct that cost. And you can do both the regular business expense deduction and that 45F program. So there are ways to utilize tax code to be a little bit more business friendly for those employers that are helping their employees pay for their early childhood education expenses. So I think that's it. Yep, that's it. So I'm going to stop sharing right now, and let's see if there was okay, wait. Looking at any chats. Would some community opportunity zones in rural Buffalo County qualify too? If it's outside that, if it was outside that picture in the blue boxes, those are the only ones that would qualify. Oh, if I understand your question correctly, if they are in those opportunity zones in that like those blue boxes, absolutely they qualify for 100% non-refundable tax credit. If they are outside those blue boxes, but they have a subsidy contract, 100% non-refundable tax credit. If they are outside those blue boxes, no subsidy contract, 75% non-refundable tax credit. Okay. Possible to receive the slide deck, absolutely. Form 45. Yep.
And Denise, I want to clarify a little bit on that last question you have. Elm Creek, Pleasanton, Ravenna, they're still really in their implementation and planning phases. So as far as actual facilities, so Mike maybe need some clarification on that. If they form a nonprofit such as Elm Creek does have a community nonprofit to address early childhood capacity and quality access to quality care, that there's not necessarily a designated project. Is that still an eligible contribution, or does it actually have to be a project, a facility type project?
Well, so if an employer gave funds to a nonprofit, and that nonprofit's for the essential goal of starting an early childhood facility / program, is that what you're saying? Then that should be eligible.
They may not, depending on what their planning comes to after
Okay.
what their implementation is.
Yeah.
They
Sorry.
go through their planning phase. So I don't know if, none of these communities, I would say maybe Ravenna, if any of them might have a specific project identified to eventually do. I would say right now they're still very much in planning phases.
I think for the 45F program, it would need to go to I think it would have to be facility based. Now, yeah, again, this goes back to, I'm not a tax professional, right? There's probably some nuance in there, and I hate when people say there'd be nuance in there, but I do think that if a person was ever if a group is ever audited, I think they could probably, if they, like, if money was given to the nonprofit and the nonprofit just decided that they wanted to spread dollars around to existing, like, say, in-homes, right? I still think that would qualify. But it has to be really, it really needs to be documented that it was for their employees. It can't just be, say, community based. There has to be a nexus between the employer and the employees.
If there was a private licensed individual in a community and wanted to open a second facility, that a contribution, maybe the state contribution, would be something that could be utilized for that, for the establishment of a second,
Yeah.
contributions to a second facility.
I believe so.
Denise,
I'm
I think
in
I'm
there
trying to
I'm in
cover
there
some of those
attaching-
scenarios in my mind that you might be thinking of.
Yeah, yeah. And again, if I go back up, I guess I'm not sharing anymore, but for the childcare tax credit contribution, part of what the receipt says is, check the box, and it would be for the establishment or operation of an eligible program. Well, boom, that's pretty easy. Again, scholarships, to an early childhood collaborative or intermediary to provide training, technical assistance, or mentorship. I mean, there's for childcare providers. I mean, there's a lot of eligibility in here. That's why it's really so exciting. The only thing that's maybe not so exciting is that there was only 2.5 million for those tax credits. When did Melissa get on the call? Boo! I'm just kidding with Melissa.
Hi, guys. Sorry, I got this link sent to me and then I'm like, oh, it's Buffalo County. So sorry for hijacking your call a little bit. But
Yeah,
excited
no one from Sherman
to learn
County
more.
can ever do anything. But does anyone happen to know if you can double dip on the childcare tax tradition? Okay, so the question is, can you do the childcare tax credit and the CDAA? It's not written anywhere where you can't. I think it's because it's two different funds. So you get 40% on one and then maybe 100% or 75% on the other, right? The only difference is, and this would be, it's going to be different forms. The difference is, with the childcare contribution, you cannot take in kind. Okay, CDAA you can do in kind, but with the childcare contribution you can't do in kind.
Sweet. Thank you.
Sure. Yeah, well, what I would say with all of these is think creatively and just be able to somehow just be able to justify it. I mean, it's new programs. We haven't seen a lot of guidance behind it. We haven't seen people use it. So I think just be creative and be able to document what the thoughts were behind it.